what we have with us is a research report from a Morgan Stanley team called Connecting the Dots, Reflections on 2014. We have the team that has written that. Okay, just a minute. We just have to digress on the news that's coming in. The government has appointed Amay Hattangadi as Managing Director of Oriental Bank of Commerce. There are 8 banks that don't have a chairman, so I don't know if all the 8 names will come out right now, but that itself is a very good improvement going into that banking, what is that, Gyan Sabha on 2nd and 3rd. So that's, oh yeah, all the names are coming in. P. Srinivas, Managing Director and CEO of United Bank. KK Sansi gets Vijaya Bank. Amay Hattangadi, of course, was one for Orient Bank. I think it's BOB that we would be more interested in. That's the 3rd largest bank, public sector bank, that is. And that hasn't had a chairman for the past, since July when Mundra became Deputy Governor. So that would be very closely watched. As, of course, Indian Overseas Bank, a whole host of banks are looking for chairmen, and so are we. All right, government has appointed 4 of the positions. I guess more we will get to know in a bit. Okay, so I was telling you that this Morgan Stanley team of 2 people, Amaya and Swanand, who are with us, have authored or do author every year a report on the reflections of the previous year and what lessons we can carry forward for the next year. It's called Connecting the Dots, Simavalokan 2014. Let's straight away get to the authors of the report. Amaya, Swanand, thank you very much for joining us. All right, let me start with you, Swanand. You start your report by saying that one of the big events of the last year was India moving out of that Fragile 5 team. Do you see that as a continuing trend in 2015?
Surely, yes. So, we started the report saying one of our big learnings for the year was that sentiment is very fickle. So, what we have seen in the last 1 year or so from, let's say, September of 2013 till maybe September of 2014 was almost a 180-degree shift in the way India was perceived. We joined the infamous Fragile 5, which are the 5 economies which had the highest current account deficits. When the taper tantrum started, those economies suffered the most. From there on, today, we are one of the best performing emerging markets. So this is not all about sentiment. What has happened is there has been a fundamental improvement in the current account deficit as well. So if you saw our current account deficit at that point in time was more than 4% of GDP. We'll end this year at less than 2%. So that improvement has definitely happened, which we think, and we wrote a report about that as well, that we think that the Indian economy is out of the Fragile 5 club. We are no longer fragile. We have shored up the reserves. We have controlled the CAD. So that construct, I think, continues. And it also shows in the currency performance, right?
India and it will show in 2015?
We think so, yes. Okay. The currency has been one of the best performing currencies in the emerging markets. Yes, it's depreciated against the dollar, but dollar has been super strong. So we are down only 2 or 3%. So that's reflected there as well.
Good afternoon, gentlemen, and it's good to see Biggie's also Lata working on 31st of December. Yes. So thanks so much for taking the time out and joining us. Amay, just for the benefit of our viewers, walk us through the one takeaway. He told us sentiment is fickle. What about the other 9? Quickly run us through the key learnings.
Well, I think the other key learning was don't chase the consensus trade, right? The consensus trade in May of 2014, after the election results, was to chase the stocks in the infrastructure sector, road sector, power. And what's happened since then is actually quite the opposite, right? These sectors have underperformed. Many of sectors, whereas sectors such as healthcare have done extremely well. So not chasing the consensus trade is the other learning. And then, of course, each market has some very local stories, right? In India, for example, you have some unique products, companies selling products such as air coolers, for example, which have done far better than companies which probably which were believed to be part of the global trade. So some of these local stories have been very unique to India, and I think not chasing the consensus trade, following these local stories are some of the other learnings for 2014.
Okay, what's the what can be the news stories for 2015? Would you avoid, for instance, PSU banks were the outstanding performer of 2014, beating the index, almost double. Nifty is 30%, the PSU banks are 67%. Would that be an avoid for the next year?
Well, I think we look for new themes to play. And I think one of the emerging and enduring theme could be the aspirational consumer. The other enduring theme could be the shift from the unorganized to the organized sector. And a third theme which we think would endure in 2015 would relate to the movement of goods and people, so movement of freight and automobiles. Yeah, logistics and autos in general. So I think these are three themes that we think could be the emerging themes which could endure for longer period rather than, you mentioned SOE banks. So many of these SOE or PSU banks are often cyclical trades.
No, you clearly mentioned that winners of previous bull markets rarely regain leadership. So, therefore, to expect them to repeat the performance will be tough.
That's right.
Swanand, which themes out of the 10 you think were particularly unique to 2014 and are unlikely to repeat in 2015?
So that's a tough one. But as Amay mentioned, that there are some local stories which do well. And there are local contexts. So just to give you an example, when we go on our foreign marketing trips, one of the portfolio holding that raises the most eyebrows is a regional language newspaper. When you go to the West, newspaper is a dying business. People say, why do you own a newspaper company in your portfolio? It's a very local nuance here that the print ad growth is probably going to exceed TV ad growth in 2014. So these are nuances which you need to be aware of, which you need to keep looking for each year. So for instance, 5 years ago, there were reports that a category like hair oil is going to die a natural death, and all of us are going to use gels and serums. That hasn't happened. So you have to keep an eye out for these local stories, stories which are unique, peculiar to India, and these may keep doing well.
Okay. Well, what's the sense in terms of expectations from the economy?
Well, I think 2015 is going to be a year where the market participants are, going to wait for to look for the results, right? We've had a lot of re-rating on the back of hope of a cyclical economic recovery, hope of a good political outcome, hope of reforms. I think 2015 is going to be show me the results, right? It's going to be show me the results in earnings, show me the results in the economic turnaround. So I think 2015 is really going to be that, and we're going to track various segments of the economy to see if some of the green shoots are really going to endure and turn into a more sustainable recovery in the economy.
No, sitting at this point, would you look for the cyclical trade, therefore? At the moment, you are advising a cyclical trade.
No, I'm saying that the hope of the cyclical recovery is what led to the re-rating in 2014. Yeah. We will now have to look for specific pockets where this recovery will actually fructify.
Okay. So basically, bad becoming less bad was a re-rating trigger according to them in 2014, and less bad becoming good will perhaps be the next re-rating trigger in 2014. We're running out of time. In 2013, you had, in your report, you had said one key takeaway was don't invest in beta. In 2014, you've said the strong market performance does not equal a beta rally. So that theme of, investing in beta has continued at least for the last 2 years. What's your sense about beta in 2015?
I think that will continue. So as you rightly mentioned, we observed this for both the years 2013 as well as 2014. And typically in the minds of investors, a strong market outcome, so Nifty is up 30% this year, is closely associated with a beta rally. You tend to get into high risk stocks, you tend to get into stocks which have a high beta or correlation with the market. But what has happened in 2014 is that despite strong markets, you have got stocks with high ROEs, quality managements outperforming. Which is a trend which was different from, let's say, 2009. If you remember, when we had a very strong rally and a lot of beta stocks did very well. I think the trend of good quality managements showing good earnings growth, doing well, will continue into 2015 as well.
So it will be an alpha rally. Okay, one final question, and I really wish you all will commit yourselves to it. 30% in 2014. What will 2015 bring in terms of index returns?
Well, I was trying to avoid that question.
Monosyllabic.
Well, I think it won't be a very linear rally in the sense you may probably not end at the high point in 2015. But like I said, it's going to be very selective. It's going to be pockets where you are seeing the turnaround rather than a broad brush re-rating. And the market returns may not, from an index point of view, measure up to what we saw in 2014, but you will have pockets of excitement.
Okay,
Lata, they started that question even with their investors, because I'm reading from the report. He said the only thing that we're going to go with is just to bet that the index level for 2015 end will be better than what we are today. So they've started that answer.
But the easy pickings are over. That clearly is what the message is. Thank you very much, Swanand and Amay, for joining us, and have a great 2015 year.
Thank you.
Thank you.